So again, I'm waiting for more people to join, but we talked about the indexes yesterday, and we'll do a brief review of yesterday. But if you follow along today, you're going to be able to understand what the futures are because it's going to be similar to what we talked about yesterday. Now we're going through the stages of understanding futures so that by Friday, when we're just pulling up futures trades at different times of the day or different charts, you guys will be able to follow along. Hey, thank you for the gold chain. Thank you for the gold chain. All right. Cool. So if you want me to look at your stock, give it to me in the comment section. Now I'm gonna try to get to your. I know yesterday we didn't get to any stocks whatsoever, and that's my bad, right? We're educating. This is education week. So the faster that I get through it, if we have time at the end, we can look at some of you guys' trades for the day. All right, cool. Did anybody trade anything today? I saw a couple of people that traded the futures market. For you guys that learned futures yesterday, did anybody try it out today? Did anybody try trading the futures market today? We learned about the S&P 500 with the micro ES. We learned about the micros in general, but you can trade the Dow, you can trade the S&P 500, you can trade the NASDAQ, you could have traded the Russell 2000. So we talked about those four yesterday. Anyone trade the futures market today? Only on paper, and that's fine. Even if you trade it on paper, when people say they traded it on paper, guys, it means that they're using paper trading accounts. They're using accounts where you can trade fake money. I say fake money, but it's not real money. And you can trade the market in real time, and you can start, creating that strategy or understanding how the market commit real capital. It won't be so hard. All right. So you guys are okay. So a lot of you guys were trading it on paper, and that's exactly what I wanted you guys to do. But let's talk about the commodities market. All right, because the commodities market is very important. Yesterday, we talked about the indexes, and when we talked about the different indexes, we talked about how the MES and the MNQs and the Dow had expiration dates. And I was trying to make sure that you guys understood that if you're getting in and out the same day and you know that you're going to buy a futures contract and you're going to be out in like 7 days, most of the time when I go and I trade the futures market, guys, I never even look at the expiration date because it doesn't matter. I'm going to be in, I'm going to be out, I'm going to be on my way. The beauty of the futures market is that you can get in and out the market multiple times, and I don't have to be labeled a pattern day trader. And when people ask me, Joel, about how much money can I make, trading the futures market, I say, well, depending on whatever contract you buy, you can make anywhere from 5 to, some days, maybe even 20%. Now, it's not going to give you that kind of move that you'll get in the options market, but I actually think that that's pretty cool, right? The options market is just obscene. You can make 50%, 100% returns in a day. The futures market is pretty much used just to create a steady stream of funds. I can risk a certain amount of money to make a certain amount of money, and I can get in and out multiple times a day, where in the options market, unless I have $25,000 sitting in an account, I can't just buy an option and sell an option and buy an option and sell an option and buy an option and sell an option over and over again unless I have a $25,000 account. So most people go into the futures market so that they can trade the indexes, and you can also trade the commodities too. But before we even get to the commodities, guys, I want you guys to understand that the commodities can get you in trouble. The commodities market can get you in trouble because you're actually buying commodities. You're buying commodities and selling commodities and buying commodities and selling commodities. Now, I can come on here and I can say, hey guys, the commodities market is, your gold, your silver, your oil. But the real definition, if I was explaining, and I had to ask ChatGPT, I said, if I was explaining the commodities market to fifth graders, how would I explain what commodities actually are, right? And ChatGPT says, imagine the stock market is like a giant store where people buy and sell things. But instead of buying toys and clothes, sometimes people buy and sell commodities. A simple way to explain it to a fifth grader is to say that the commodities are basic things that come from the earth that everyone needs. So anything that comes from the earth, guys, like natural gas, like coffee, like silver, like gold, corn, oil. Guys, you can trade cotton and lean hogs in the commodities market, in the futures market. So you can, right? So they're raw materials, guys. They're raw materials that many companies use to make other products. So you have the opportunity to be able to buy and sell these commodities just like we were buying and selling the indexes the day before. Now, earlier, I told you guys, hey, don't worry about the expiration date because when you're trading the indexes, you're just getting in and out the market. And, it really doesn't matter. You guys need to pay attention to the expiration date when you're trading commodities because if you wait, listen to what I'm saying. If you're buying and selling gold, or if you're buying and selling lean hogs, or if you're buying and selling silver, right? If you wait until that expiration date, thank you for the gold, Lisa content creator, Lisa C. If you wait until you just purchased gold, you just purchased silver, you just purchased oil, and whatever address you have on that account, you're going to get delivered gold, silver, oil, lean hogs, cotton, copper, corn, orange juice. You're going to get delivered that stuff. Now, I'm being funny right now, but I'm not being funny because you're actually buying actual commodities. So it's kind of fun, but it ain't fun, guys, if you wait until the expiration period. So if you want to protect yourself, get in and out of these trades in like 7 days and be done with it. Don't try to hold it for weeks and months unless you are an expert, okay? You can come in as a beginner. Well, I would say an intermediate trader. And you can day trade the market and you can day trade oil and silver and cotton and lean hogs. And you should be okay. And if you're working with a broker like Charles Schwab, they're going to protect you too. They're going to alert you about the alert. They're going to send you emails. They're going to say, hey, we are responsible for you. We know you ain't trying to buy lean hogs. You need to get out of this particular trade. And sometimes, guys, they'll just go in there, they'll override you, and they will sell it before that expiration date gets there, either for a loss or for a profit. So I want you guys to understand this. In the comment section, please let me know that you guys understand. Say, I understand, Joel, in the comment section, please. Because this is one of the most important things when it comes to commodities trading. You're actually buying commodity. But you can get in and out in 30 seconds if you want to. I can buy a pig and sell a pig in 5 seconds and never have to buy a pig again. I can buy corn, sell corn in 10 minutes, never have to worry about buying corn again. I can buy gold. I can sell that gold in minutes. I can buy and sell silver in minutes. I can buy and sell oil over a couple of days. And then the same day, get in and out and sell it 7 or 8 times in minutes. If you wait until that expiration date, you have bought oil. All right. Now, you don't have to worry about, like, if you're getting in and out the same day, the expirations are not going to be like the next day. They're not going to be like options, guys. They're not going to be like Friday options or where the expiration is like every Friday. More than likely, when you buy these commodities contracts, usually they're like 30, 60, 90 days out. Okay? 30, 60, 90 days out. So I want you guys to be extremely careful if you decide you want to buy commodities. Does everyone understand? I don't think did I get any okay, I got a lot of understands. Say, yes, si comprende. Please, I don't want to hear any horror stories about you taking a futures class with Joel and you bought some commodities and now you got to put your house on sale because you done bought, some gold or 1,000 barrels of oil. And then you calling me up talking about, Joel, do you know anybody that want to buy some oil? I wasn't listening, and I just bought 1,000 barrels of oil. They just delivered it to me. I don't even know where to put it. Is there anywhere you can store this oil? I don't want to scare you, but I want to scare you. But you can be, guys, if you get in and out the same day, in and out the same week, you're going to be fine. And the futures market is very, very liquid. If you decide you want to buy crude oil today and sell crude oil, guys, there's going to be somebody there to buy it. It's not like the options market. If whatever price you see it at that time, even if it's 23, I don't care if it's at the weakest part of the day, you're going to be able to sell it. All right. If you look at the bid and the ask spread, you're going to be able to sell it to somebody. If a couple of contracts. Now, if you're a whale, if you're in here, guys, and you're a whale and you're buying $100 million worth of anything, you might need to go to another room. All right. I don't mind educating you. But if you're buying $100 million worth of oil, in that particular situation, you might have an issue selling all of it. All right. But if you're buying 1, 2, 3, 4, 5, 10, 100, 200, even 1,000 contracts, you should be able to get in and out very, very easy. Very, very liquid. Very, very liquid market. All right. So we all understand. I know I'm spending a lot of time here, but I want you guys to understand you are buying and selling actual commodities. Now, let's talk about the commodities we're going to talk about today. We're only going to talk about gold and oil, the most popular. Gold and oil. Gold and oil. All right. That's all we're going to talk about today. All right. Now, there is a micro crude oil. We call it MCL. There's also micro gold, which is MGC. And we're going to talk about that. But before we start, I always let everybody know my name is Joel Harrison. I'm an expert in stocks, options, futures, and a little bit of cryptocurrency. I have over 30,000 hours and over 10 years of trading and investing experience. And anything we talk about today are the opinions of Joel Harrison. Opinions. This is a do-it-yourself room. We are here to learn how to do things on our own. All right. This is not a resume. This is not a job interview for me. All right. Please do not go into my inbox asking me to trade your funds. Joel, I got $773. Can you trade this for me? And then when I say no, oh, you just think you better than everybody. I'm not trading your $773. Okay. We're here to learn how to trade on our own. I want you to invest that $773 Actually, invest 663, and then I want you to learn how to trade with that 100. All right, that's what I want you to do. Maybe even use 50 of that. Maybe do a one-on-one consultation with me. All right, we're going to learn how to do this on our own. I'm only one person. I'm not, but if you are part of the super fan group, I do put out there like all day long. If I'm not on the golf course, and I was on the golf course earlier today, when I'm not on the golf course, I am calling out trades. I'm calling out the market. I'm telling everybody what I'm buying, what I'm selling, what I'm doing. Now, the market was too volatile today, guys. Anytime you get the market in close to the 30s, I don't really like to trade it because we don't spend time over 20. The stock market spends most of its time with a volatility less than 20. Anytime you start creeping over 20, you get this kind of movement. You'll get nice moves every now and then, but you get all of this, right? So I rather look for companies that I'm thinking about buying. I look at some of my companies that I own that I'm thinking about selling. I spend that time trying to rearrange my portfolio. And every now and then, I'll try to take a couple of trades. All right. Yes, I'll be looking at the futures market, but anytime it's over 20, I'm like, I'm going to chill a little bit, right? Now, we hit 28 today. And for you guys that don't know what the volatility index is, we'll look at it later. But we hit 28. Now, we hit 28 last year also. We hit 50. And then after we hit 50 in April, the highest the market ever got on that volatility index since April was a 28, and we hit 28 today. That's why the market turned around. If you are a statistics guy and you love math and you love charts, then you're my type of person, because that's why it turned around. If you realize the market, if you see in your charts the market turn around at 28, guys, there are other people that are just like me, just like us. I know a lot of you guys don't believe the information that we see, but you guys are learning what you should have been learning in the first place. I know you guys are now finding yourself sometimes ahead of everyone else. Like, you guys are now learning and seeing things before the masses see it. So we already knew 28, 28, 28, 28, 28, 28, right? You're now becoming a 1%er, a 2%er. So when it hit that 28, 30 area, you should have been either trading or reversing the market and seeing if we could go, taking a shot at it. And sure enough, if you were watching the market and you were watching the VIX, you could have caught the low of today. And it might be the low of the next couple of months, because the last time we hit 28, guys, the market hit a low. And then we didn't see that low again. What was it? That was in August, September, October, November, December, January, February, March. For 7 months, you could have made money to the upside. All right. So let's talk about commodities again. Yesterday we talked about the micro indexes with the MES, with the MYM, and the MNQ. So if you were here yesterday, we didn't really worry about the expiration date because we were like, oh, we're trading the indexes. The S&P 500 represents the 500 largest companies on the planet. The MYM represents the Dow 20. And then the MNQ represents the 100 tech stocks, the NASDAQ 100 that's out there. You can trade all three. And I should have added the Russell, which is the M2K. M2K. Now, does anybody know what movie this is? Put it in the comment section. Does anybody know what movie this is? Put it in the comment section. There you go, Wesley. Wesley got it right. Well, actually, you didn't. You got close. It's Trading Places. All right. Now, why am I even showing Trading Places? I know you guys are like, why are you showing me Eddie Murphy, right? Why are you showing me Eddie Murphy, Joe? What does that have to do with what we doing today. Well, do you guys know what they were trading? Do you know why they were able to get rich? I know you guys are learning now. You're like, well, yeah, what was they trading? Because back then it was so complicated, like none of us knew what they were talking about. Does anybody remember what they were trading? Yep, they were trading. Sean, Miss Crystal, you almost got it right. But they were trading orange futures. They were trading orange futures, guys. They were commodity traders. And remember, they got the information on the crops and if the crops were gonna be, doing well, in the next 3 months, or if it was gonna go down. And they had that information beforehand, right? They had that insider trading. They had that insider information, and then they used that to bankrupt. Y'all remember these two guys? They used it to bankrupt these two guys, Randolph and Mortimer Duke. And here's what's interesting. A lot of you guys didn't recognize them. Some of you guys weren't old enough to see Trading Places, but y'all did see Coming to America. And when you saw Coming to America, there was a scene where Eddie Murphy took Arsenio Hall's money because Arsenio Hall was acting up. So he put Arsenio Hall on punishment. Then he took his money, he put it in a paper bag. And then when he was walking, down New York, streets, he saw these two guys, these homeless guys in the streets. And then he gave them a bag full of money. So a lot of you guys are like, I didn't get the reference. Well, that reference was from Trading Places. All right. And then they were like, you remember what he said? He said, Randolph, we're back. Anyway. So, I love little, when you're a nerd, you love little stuff like that, right? So they were trading orange futures, right? And it was from that movie.
Can I get you anything?
Now, again, we're going to talk about gold, and we're going to talk about, you say you're not old enough, Master?
No, thank you.
Either movie. You're like, what's Coming to America, sir?
Of course, it's only my second bottle.
But now when you see, Now when you see Coming to America, you're going to get it. Now when you guys go and watch Trading Places, you're going to understand it now. And it's going to be so much better when you go and you watch it now. Yep, you sure do. But that's what they were trading. They was trading orange futures. Now, let's talk about gold futures first. You remember yesterday, guys, how we did the math? We're going to look at a chart. And for you guys that are coming in here for the first time, when you're trading futures contracts, you have to have a certain amount of money in your account to be able to buy a futures contract. Now, here's the thing. That's called margin. How much margin do I need? How much money do I have to have in my account so that I can buy one contract? Now, if you wanted to trade gold on the Thinkorswim platform, if you want to trade gold, which is MGC, well, it's /MGC. If you want to trade MGC on the Thinkorswim platform, you need $6,310. Well, yesterday, Raymond, it was $24.58 for the ESs. Every futures contract is gonna have a different margin amount. I knew you guys were gonna get caught up on that. It's not $24.58 for a futures contract. $24.58 was a futures contract for the S&P 500.
Yeah. Must be over there.
Yeah.
If you want to trade gold, you need more than that. You can't have $2,458. You need $6,310. So I want you guys to write that down because we're going to talk about gold first. And I'm going to keep asking you guys, how much money do you need in your account? And you're going to say $6,310, Joel. I know that's a lot of money for some of you guys. I know that's a lot of money, but when you think about opening up your own business, let's say you wanted to open up a restaurant, or you wanted to open up, a car washing stand, or let's say you wanted to open up any business. I look at this as a business expense. If I want to trade futures account and I have a futures account that I treat as a business, like this business right here buys and sells futures, buys and sells commodities. That futures business that I'm going to create I'm gonna have to invest $10,000 in that business so that business can buy and sell things. So they're not gonna charge you $6,310 every time you want to buy a futures contract. You just have to have that in your account. You just have to have, you have to go? All right, Lisa, bye-bye, ta-ta. See you at 10:59. I'll see you and Mrs. Treetop at 10:58. All right, so they're not going to charge you $6,310, guys. That's just how much your business has to have in your account. As long as there's $6,310 in your account, I always tell people, if you want to create a business just for investing in the futures contract, throw $10,000 in an account. That's your business account just for futures. And then open up another account that's strictly for
and I'm so grateful
strictly for options, and then open up another account that maybe is just for day trading. That's how I'm set up. I have a day trading account, an options account, and a futures account, and that's totally different from my 401k, my SEP IRA. I want you guys to, I know that's not simple for a lot of you guys. I know a lot of you guys want to put everything in one account, but if you put a dinosaur, if you want to, I always tell people, when you set up those accounts to do what it's supposed to do, then when you're in that futures account, your mind thinks like a futures trader. If you have an options account, I promise you, if the whole account is set up just to buy options, you're not going to think about how a futures trader think, or how, someone that's in the stock market is thinking. You're going to let that account do what it's supposed to do. If you have a retirement account, guys, and it's set up just for retirement, you're not going to sell everything just because a missile went off in Iran. You're going to be like, this account is set up so that when I retire 20 or 30 years from now, I'll be okay. In fact, I'm going to buy some more of that stock because the market came down. If you set up accounts and let those accounts do what they're supposed to do, you're going to be okay. So in my opinion, I want you guys to separate all of them. Options over here, futures over here, stocks over here, retirement over here, day trading right here. Okay? 3, 4, 5 different accounts. All right? And then as you guys get better at investing and trading, you can maybe consolidate some of them. Maybe you want to put the futures and stocks in one, but I don't want you guys to ever mix your day trading accounts with your retirement accounts. That is a no-go. Stop doing it. So let's get back to gold. In the comment section, how much money do I need in my account to trade one contract of gold? I'm going to keep saying it over and over again so that you guys understand margin. What do you need in your account? You need $6,310. Now, if you have $6,310, this is not the requirement across all brokerages. Every brokerage is going to have a different margin requirement. Webull, if they do futures, might be different from Robinhood, which will be different from NinjaTrader, which will be different from Thinkorswim. I love Thinkorswim because Thinkorswim, in my opinion, is one of the best platforms and best banks that are out there. And they kind of know where to keep the margins to protect you from you. Those margins are there for a reason so that you guys won't blow up these accounts. So they're like, man, let them make sure that they have enough funds in that account before we start letting them buy one, contract of gold, because they don't realize how much gold they actually are, have access to. All right. Now, you need $6,310. Okay. You need $6,310. The way that you pull up the margin is you're going to have, for you guys that are on Thinkorswim, if you go to the right side of your charts.
Did they let
so
if
you go to the trade tab and then you go to trade and you see on the right side where you can hit charts, it's going to be like C1, C2, C3, your active trader tab. You're going to see a tab that says DB. All right. That's dashboard. When you click that dashboard, if you have the futures contract if you type MGC and go to dashboard, you're going to see something that looks like this. All right. If you do it correctly, you're going to pull up something that looks like this. And it's going to say, this is how much gold is. Gold is $5,153. If you notice, over here where it says buy 5,153.9. If you notice, gold moves in what we call ticks. Every tick, meaning every 10-cent move, you're going to make or lose $1. If it's going your way, every time it ticks, you're going to make $1. But y'all know how I am. I don't like looking at the dime or 50 cents. I always round up to the dollar. So every dollar move, in the comment section, if every tick, which is 10 cents, is a dollar move, it was $1. So if it goes from 5,153 to 5,154, how much money do I make? If it goes from 5,153 to 5,154, how much money do I make?
$100?
Good answer. Mrs. India Marie got it right.
$10,000.
You make $10 for every dollar move, but every tick is going to go 10 cents, 20 cents, 30 cents, 40 cents, 50 cents, 60 cents. But every dollar move, I'm going to make $10. So if it goes from 51.50 and I get in and it goes to 51.60, we call those points. It went up 10 points, but I make $10 per point. So if it goes up 10 points times $10, I'm going to be up $100. How much money do I need in my account to do this? How much money do I need in my account to be able to trade gold where every dollar move I can make $10 for every move? How much money do I need in my account? $63.10. You guys are getting it. That's the margin on Thinkorswim. So we're understanding margin. We're understanding that 1 point is equal to $10. That's the math. All right, so let's go and let's look at some gold, right? Let's look at a chart of gold. All right, now watch this chart, guys. In this chart, I want you guys to do the math. We're about to do a math problem. You guys are looking at MGC. MGC does have a April 26th expiration. We do not want to hold it past April the 26th. No, no, no. But let's say on August the 27th, guys, I'm sorry, October the 27th, On October the 27th, guys, gold was 4,300. Let's say I held gold from the past October, the October that just passed. Let's say I held gold from 4,300 all the way up to 4,600 on January the 13th. So I'm gonna buy gold.
1,300 so far.
I'm gonna buy gold.
Times 10.
How much money do I need to buy gold? One contract again. How much do I need in my account on October the 27th? How much did I need in my account to buy one contract? Exactly. All right, Joel, I'm getting it. I'm getting it now. If I had 6310 in my account, I was able to buy gold at 4,300. If gold in 2 months goes from 4,300 to 4,600, how much money did I make? If gold went from 4,300 and I was long and it went to $4,600, how much money did I make in 3 months? In the comment section, I need to see the math. Now, why is it, there you go, Ann got it right. There you go, Amber. Is that a second account? That's your backup account? All right. So, where did we get the 300 from? Well, we took 4,300 and we subtracted it from 4,600. That gave us the number 300. But we make $10 per dollar move. I would have made $3,000 profit. But how much money did I need in my account to make that 3,000, and what percent return did I make? How much money did I need in my account, and what was my percent return? And it can be an average. It doesn't have to be exact. It doesn't have to be exact. You buy gold for 4,300, it goes to 4,600. I need to know how much I needed in my account and what is that percent return. Remember, if I'm using 4,600 and I just made 3,000, you divide the 3,000 by 4,600. All right, the 6310 was the 6310. The 6310 is how much you needed in your account. You just made $3,000. You made roughly 50%. Hold up. You guys couldn't get that? You made $3,000. Let's go back. Wait, is that right? No, you use. Oh, am I wrong? I am wrong. Wait, hold up. Oh, yeah, I am wrong. You used 3. No, you're right. Right, it should be right around 50%. Because the margin is 63. The margin is 63, so 47 is actually it. 47 to 50%. All right, let's go back again. I done confused myself. You needed $6,300 in your account. That's where you started with. 6,300's in my account. That's all they look. They peep in there and they say, okay, you got 6,300 in there. You can buy one contract of gold. You buy a contract of gold. You buy it at 4,300, guys, but it doesn't take 4,300 away from this. You're just buying gold at that level. You're buying gold at 4,300. Gold goes from 4,300 to 4,600. It moves 300 points. You make $10 per point. 300 points times 10. I make $3,000. I needed 6,310. I made $3,000. I needed 6,310. I made $3,000. I needed 6,310. I make a 47% return in 3 months trading gold. Now, watch this. What if you took your profit and then the next day you got back in again and you said, all right, now I'm gonna ride gold, and you ride gold from 4,600 to 5,600. How much money did I make? Let's say you got in gold again at 4,600 on January the 13th. 2 weeks later, guys, 2 weeks later, 14 days later, you get out at $5,600. How much money did I make? I need to see the math. And it's killing you guys on this math. Smoking y'all. It moved 1,000 points. Where did we get 1,000 points? We subtracted 56 from 4,600. It moved 1,000 points. But I make $10 per dollar move. So 1,000 times 10 is 10 grand. How much money did I need in my account to make that 10 grand? I must keep saying it over and over again. How much money did I need in my account to make 10 grand? I needed 6,310. I just made over 100% in gold in 14 days. That is the beauty of the futures market. Anybody confused with the math? Be honest. If you're confused with the math, where are you confused? Are you confused with the 46 to 5,600? I know a lot of you guys are like, do they deduct the 4,600 from your account? No. The only thing they're going to do is they're going to peep. Let's say you have a $10,000 account, guys. Let's say your account starts with 10 grand. Let's say your account starts with 10 grand even. And you buy this, you buy one contract. Because you have $6,310, that's all they're looking for. Even though your account has 10 grand, your trade starts at 4,600. They're not going to take 4,600 out of your account. That's just where you start on your long. So your account's going to say 10,000, 4,600. As this goes from 4,600 to 5,600, your $10,000 is gonna, when it gets to 5,600, because you made 10,000, you're gonna look in your account and it's gonna say 20,000. The reason why we made a higher percent return isn't because you had 10,000 in your account and it doubled. It's because your margin was only 6,310 and you made $10,000 on that margin. But the 10,000 was 10,000 at the 4,600 level, and if it went up $1, you would have had 10,010 bucks in your account. If it went up $2, you would have had 10,020 bucks in your account. If it went down down a point, you would have had $9,990 in your account. If this went down from 4,600 to 4,590, you would have had, that's 10 points. You would have been down $100. You would have had $9,900 in your account. So remember, guys, the 6,310, they're not going to deduct it out of your account. And when you buy it at the $4,600 level, they're not going to deduct that either. You just need 6,310 and your trade starts at the 4,600 level. Anything higher than the 4,600 level, you make money. Anything lower than the 4,600 level, you lose money. But you needed 6,310 in your account. I could have $1 million and I could have $1 million in my account and I can buy one contract. It doesn't change my million. But if we go from 4,600 to 4601, I'm going to have $1,010 in my account. Do you guys understand now? Hopefully I got it. Hopefully you got it. All right. Cool. Wait, let me look at some of the questions. I'm sorry. Can you explain again why you cannot hold past the date? You can't hold past the date because the expiration date. All right. I want you guys to think of an expiration date like you buy a house. If I was to buy a house and we wrote a contract on that house, it's going to say, let's say I wrote a contract today and I say, I'm going to purchase this house from you on March the 30th. I don't have the funds now, but I want to hold on to that house. And on March the 30th, I'm going to come with $1 million and I'm going to buy that house from you. If you wait until that date, you just purchased that house. If you wait till the date, you just bought gold. If you wait until the date, you just bought oil. So that's why you don't want to wait until the date. Because that means you have just bought 1,000 barrels of oil. I don't know how much gold you just bought, but I'm pretty sure it's not enough in your account to cover the gold you just bought. So that's why you don't wait past the date. Shaq Bully, don't do it. Yes, Safari. They're gonna deduct the commission. So guys, you do get a deduction. The only deductions you get are the commissions. My commissions are 75 cents. I think it's 50 or 75 cents. Your commissions might be $1.50, $3.50. When you first start, your commissions are high. Once they find out you are a trader and you do a lot of trading, they're gonna lower your commissions, or you need to call. Making a lot of money, I will take my business elsewhere if you don't drop my commissions. But guys, you can't do that unless you taking 50 to 100 trades. They're gonna be like, go on with your little $733. You can't afford a futures contract anyway. All right, they will send you on your way, so you gotta have a little bit of leverage, and your leverage that you're using, or how active you are in your portfolio. All right, that was gold. Let's talk about good old oil. Let's talk about oil, which is interesting because I thought I had the oil slide, but I don't, but that's fine. This is how your dashboard is going to look. What do you guys see for the margin? If I wanted to buy M/MCL, which is crude oil, how much margin do I need on Thinkorswim? I'm teaching you guys how to see this. You can see it right there in the middle of your screen. What is my margin requirement? It's going to say QTY and margin required.
1100.
QTY
91.
and margin REQ equal to a number. How much money do I need to be able to control about, I think this is 100 barrels, because I think 1,000 barrels is for the big ones. So I think this is 100 barrels for the micros. You need $1,191. Yes, you can negotiate, and you can negotiate. You can negotiate your commissions. Don't tell them Joel told you, though. All right, guys, I need $1,191 in my account to be able to trade oil futures. I need $1,191. Now, I forgot to tell you guys this when we were looking at gold. You can buy as many contracts as you can afford. And if you buy 2 contracts, it doubles the amount of money that you make. But it also doubles the amount of money that you can lose. So as long as you have, like if I had $2,400 in my account, then I can buy 2 contracts of oil. And I don't even have to buy it at the same time. I can buy one, I can sit back and chill, and as long as I got $11.91 in my account, I can buy another one. All right. Usually when I'm buying anything, I don't care if it's options, I don't care if it's futures, I don't care if it's crypto, I don't care if it's stock. I'm going to buy at least 2 shares, 2 contracts every single time. And people ask me all the time, Joel, why would you do that? Because when you buy one of anything, you limit yourself. It's always all or nothing. I got to get in and then I got to get out. If I buy multiple contracts, I can scale in. I can buy one here, tiptoe into it. I can lower how much, I can lower my leverage in that company. So if I normally am risking $1,000, I can do half of what I normally do and do the same moves and only risk $500. I usually do that when the volatility goes up. I usually lower my risk, guys, when volatility goes up. I know a lot of you guys put your foot on the gas when volatility goes up. As a day trader, you're supposed to lower your risk because the moves are so violent. So if I normally trade 10 contracts and I risk $100 per contract, I'm gonna probably trade 5 contracts and maybe risk a little bit more because it's going to move more. So it's still $1,000, but I had to use less contracts, and then I had to widen my stop. So if I normally risk 100, maybe I got to risk 200, but now I'm only got 5 contracts, so it's still different. Now I'm only risking $1,000. All right. So you lower your risk as volatility goes up so that you can handle the moves of the market. My day traders and swing traders will understand that. Now, let's do the next math, because I'm teaching you guys how to do the math if I'm not around. This is going to say that the quantity, that means every tick, that means if you look at this 7642, it's going to tell you that they tick every 0.01. So it's going from 7640 to 7641 to 7642 to 7643. Every time it goes up a tick, you're going to make $1. So every time it goes up 0.40 to 0.41 to 0.42, you make $1 per tick. So, y'all know if it moves $1, thank you. Who's giving me that? Dane. Thank you, Dane. I appreciate that. I really do. Thank you for the money. Oh, thank you for the corgi. Thank you, Sue, for the money gun. Thank you, Dane, for the corgi earlier. I appreciate that. So every tick, I'm going to make $1, guys. So every 10-cent move, I'm going to make how much? Every 10-cent move, that means 0.1. That means if it goes from 0.40 to 0.50 or 0.50 to 0.60, how much am I going to make?
$1.
I'm going to make $10. And y'all know what I like to do. I take it all the way up to the 1. I keep everything simple. That means every dollar move, that means if this goes from 76 to 77, 77 to 78, 78 to 79, how much do I make per dollar move? How much do I make per dollar move? How much do I make per dollar move? You're going to make $100. Does everybody understand where I got this information? This information is on this chart. It's literally saying that for every tick, which is 0.01, I'm going to make $1. That means if you pull the decimal point over 1, that means every 10-cent move, I make $10. Every dollar move, I make $100. So let's do the math. Let's do the math. First off, how much money do I need in my account to even buy a crude oil futures? How much, if I want to buy the micro crude oil, how much do I need in my account? What is my margin requirement? $11.91. That's how much I need in my account. They're not going to debit it. I just need that. If I got $10,000 in my account, I cover it. I don't have to buy 10 of them. I just want to buy one. They're going to say, oh, you got more than enough money, sir. You can buy a contract. You can buy 5 if you want. I'm like, I'm cool. I just want one. When you buy it, guys, when you buy that that oil futures, let's get a little funky with it. If you want to pull up the crude oil's futures, you have to type in /MCL. We're going to do some different. We're going to do some funny math now. These are for the people that are betting on the market going down. That means you only make money if the market is going down. Your entry is going to be 72.30. If we drop from 72.30 to 70, how much money did I just make if I was betting on the market or oil going down in price? And I want to see the math. If my entry is 72.30 that you see on the left, and we go down to 70, how much money did I make? And I want to see the math. You're gonna make, I want to know why you made that much. This is right. Alex was correct. He put is Alex right? Is Alex the one? Yep, Alex is first. Alex knew that we made $230. Where did we get that from?
From the 72.30.
How did we make $230? Because it was simple math. Every dollar move? No. Actually, every dollar move, we made $100. Every dollar move, we made $100. So, there you go. Ann did it right. Ann did it right. Ann is getting all the answers right. We moved $2.30 because we moved from, guys, it's simple math, 72.30. 72.30 minus 70 gives you $2.30. Well, we make $100 per dollar move. It moved $2.30. If you multiply $2.30 times 100, you just made $230. How much did I need in my account to make $230? How much did I need in my account to make $230? I know y'all keep hearing me say this over and over again. You'll be surprised at how many people don't understand the margin yet. I needed $11.91 in my account. If I don't have but 1,000 in my account, I can't buy a contract of oil. I gotta buy something else. As long as you have if you have $1,192 and you can cover the commission, you can buy one contract. Someone asked me yesterday, well, what if it went against you, Joel? What if it went against you $100? You can still stay in it, guys, even if you can't cover the margin. So let's say you only had $11.91 and you bought an oil contract and it was against you $100 and you had to get out. Well, when you sell, remember you started with $11.91 because that's all that was in your account, and you lost $100. Well, you're going to look in your account. You're going to have $1,091. You're not going to have enough money to cover getting back in. You're going to have to put another $100 in your account to cover the margin. As long as you have $11.91 in your account, you're going to be able to get in as many times as you want. That's the beauty of the futures market. It settles immediately. Stock market takes days to settle. That's why you can't get in and out, because it takes 2 to 3 days to settle. Commodities settle on the spot. All right. If I'm wrong or incorrect about being, maybe it's 10 minutes it settles, but it settles very, very fast. Let's just say it settles fast enough where they allow you to be able to get in a gazillion times, and it's okay as long as you have the margin requirements. All right. Cool. Anybody confused? And if you're confused, it better be because you've been here at 6 o'clock, not because you just rolled up in here and you're like, what's a futures contract, Joel? I'm not answering questions to anybody that just rolled up in here. We've been talking about this math for 2 days. All right, let's do some more math. Let's say you went long. Let's say your entry. And guys, I want you guys to understand what you're looking at. You're looking at yesterday. So this chart that you guys are looking at, you could have made this in a day. This was yesterday. This is what oil did yesterday. Crude oil dropped $2.30, and then it rose from the same area. So remember this, you could have been a bear. You could have made money to the downside, 70 minus 72.30, $2.30. You made $230. And then you could have gone long, and you could have entered this trade at 71 and then got out somewhere around 72.20. Let's do the math. Let's say you entered this trade. Let's say you just won $230. So now your account has 11, whatever your account was, plus 230. Remember, the amount of money that you make, guys, is profit. That's on top of what you already had in your account. Let's say you take this trade and you get in at 71 and it goes all the way to 72.20. How much money did I make? Do the math, please. How much money did I make? Oh, somebody beat you, and Arwen got you. I want to see the math too, guys. I want to see the math. Yes, Zabi, you can short. You sure can. You can short. You can go long. You can go short. You could have made yesterday $230 to the downside. Then you could have gone long and exited and went $70 to the upside. You could have made $230 to the downside. Then you could have made another $230 to the upside. That's $460. And then you could have made another $200 to the downside. You could have pieced together a $600 day with $1,190. Did you hear what I just said? You could have pieced together a 50% return day with 3 different trades. You couldn't do this in the options market because the minute you take that option and get out, and then take that option and then get out, and then take that option and get out, you can't trade anymore for the next 7 days. You know why? Because now you're considered a pattern day trader. If you don't have 25K in your account, guys, you can't just get in and get out of your options multiple times a day. You can in the futures market. I can get in and out the futures market 773 times if I want to. As long as I can cover the margin and I can cover the commissions. Now, the commissions might eat you up because remember, guys, every time you buy something, I'm going to spend 50 cents. So if I buy something and I sell something, I just spent $1. If I buy something and I sell something, I spend $1 even if I break even. That's just off of commissions. So be careful if you're buying. A lot of you whales that are out there that are buying 10, 15, 20 contracts, When you buy 20 contracts, you're spending $10 every time you buy something and sell it. So you might be down $20 even though you break even on a trade. Which is why I was down the other day. I broke even on all of my trades. I was down $3. But you can be down because those commissions start eating into what you're doing. All right. Cool. Yes, futures. Oh, futures. Oh, Arwen said futures are not that easy. Really? I don't know. Futures be real easy when I'm trading it. If you're using the indicators that I'm using, futures and trading becomes a lot easier. Nothing is easy, guys. Nothing is easy. Otherwise, everybody would be doing this. But if you're using the indicators that I'm using, trending indicators, it's going to make trading and investing a lot easier. Because my charts are going to show red and green when the trends are changing. All right. All right. Let's look at oil today. Let's say you wanted to trade oil today or gold. Y'all want to look at gold or oil? Let's look at oil because it's cheaper, and a lot of people can maybe afford MCL, but they may not be able to afford gold. If I wanted to trade oil today, if I wanted to trade oil today, I'm going to show you guys my chart, and I'm going to show you guys how I would have traded oil. So again, we're going to be looking at the MCL. You guys are going to learn about these indicators the next 2 days. So you better show up. You better show up if you trying to learn my indicators. I'm telling you guys, the indicators that I use are going to be indicators you've never seen before. And they're going to be something that you say, hold up, Joel, why isn't the best of the best people out there using this? I don't know. They may not have known about it. But I'm going to show you guys 2 of the best trending indicators ever created, so that when you trade the market, it's going to look this easy. Y'all see this move right here? What color do y'all see? What color do you see on your screen? Someone tell me, what color do you see on your screen? If you didn't know to short that from 10:30 to 12:30, I can't tell you what else to do as a trader, because it's okay. So this is what, so I remember, guys, I've done thousands of consultations, right? In the consultations that I've done with these traders, the biggest thing that most traders have a issue with is they don't know the direction. They get the direction wrong. They don't know when to go long. They don't know when to go short. So they try to figure it out. They try to figure out if they can go up or down by looking at other charts. They're looking at other indicators that's trying to give them an idea. It's kind of like you're in a dark room and you're trying to feel what the walls are. That's how I feel. Before I use trending indicators, guys, I always felt like the lights was off and I was trying to figure out how to walk around in a dark room. Every now and then, if you know where everything is, it becomes a lot easier, but you got to train yourself years and years to be able to close your eyes and be able to walk in a dark room. Well, I can't see no more, guys. I can't see. You see, I got on glasses. I had to get specially made glasses just so I can look at my computer screen. I can't see. So, because I can't see, I need indicators that are like, Joe, red, down. I still can see color. I can squint my eyes, guys, and everything's fuzzy, but it's still red. So at least I'm like, okay, I know I'm supposed to at least be going down. Or if it's up, okay, it's green. All right. At least I know to go up. All right. So, I make jokes about this, guys, but I am dead serious. I am dead serious. Like, my indicators are going to get you into these companies or products or whatever the heck you're trading. Look, I don't care if you trade in Forex, futures, stocks, crypto. It don't matter. Trending indicators works on everything. So as a day trader, as a swing trader, I need some help knowing the trend. And then that's the easy part. Once I know the trend, then you can figure out how you're going to enter that short or enter that long and what's your risk to reward. But these are going to take a lot of the guessing out of it. Yeah, when it rips both ways, brother man, Steve, and you got trending indicators, you can take advantage of the rips to the downside, the rips to the upside. The reason why a lot of you guys, I'm going to be 100% honest with you. A lot of the reasons why you guys as swing traders can't catch the up moves and the down moves and the up moves is because you're using 5 different charts to figure out a direction. So you automatically either have a bias to the upside or a bias to the downside. Real traders, like the best of the best that's out there, we don't have a bias. When we're trading intraday, we come in with a bull hat and a bear hat, and we're like, all right, market, what direction we going now? Okay, we going this way. All right, market, which way we going now? Okay, we going this way. And then what we'll do is we'll put in risk to rewards, to make sure we can handle that move, because sometimes it will be a fake. I might get into a move, it might go up, it might fake out on me and then continue going in that direction. That's why it's so important that you guys have risk to rewards in place. You day traders that are out there, another reason why you're struggling, you're probably using a chart that's too high. Anyone using a chart higher than 15 minutes and you're trying to intraday between 9:30 and 4, you're using too much time. There's too much going on in that 15 minutes for you to figure out anything. A lot of the time, the trade lasts 15 minutes. So if I'm looking at a 15-minute chart and the trade only lasts 15 minutes, where are you getting your information from? So I see a lot of you guys making that mistake too. If you want to be a trader that gets in and out the same day, it better be 15 minutes or less. The best of the best are going to use a 5-minute to 1 minute. So you can use a 1-minute chart, a 2-minute chart, a 3-minute chart, a 4-minute chart, a 5-minute chart. I'm going to break it down for you because I know a lot of you guys is like, what do you know? I know a lot. No matter what chart you're looking at, if you look at the statistics, if you go into ChatGPT and you ask ChatGPT, no matter what chart you're looking at, what is the average trend of a chart? And that means if it stair steps up and then it turns around and it stair steps down and it stair steps up and it stair steps down. The average move, I want you guys to hear me out. The average move, I know sometimes you might get a 100 candle move. The average move on any time frame is 10 candles. Now, why is that important? I'm going to break it down to you psychologically. When you're intraday trading, there's only 3 time frames. When you're intraday trading, there's 3 markets. So the stock market is actually open 3 times a day. It opens from 9:30 to 12, and then you get a 12 to 2 session, and then you get a 2 to 4 session. It's broken down in 3 sessions. There's a 9:30 to 12 session, and then there's the lunch session, which is 12 to 2, and then there's a 2 to 4 session. In those sessions, think about it. How long are those sessions? 9:30 to 12 is only 2.5 hours. 12 to 2 is only 2 hours. 2 to 4 is only 2 hours. Within that 2 hours, if you are really, really catching a trend, you're catching a trend only for about an hour. I'm going to break it down again for you guys that are in the back that's not listening to me because you're talking to a real trader. The market is broken down in 3 time frames. You got your 9:30 to 12 session. You got your 12 to 2 session, which I encourage you guys don't trade because that's where most people lose their money. And then you got a 2 to 4 session. The problem is that you guys come into this market and you try to trade 9:30 to 4. That's why you struggling. Pick one of them 3 sessions. Either trade from 9:30 to 12, 12 to 2, or 2 to 4. The best traders out there are not trading 9:30 to 4. They're either trading the 2 to 4 session or the 9:30 to 12 session. The best of the best. Go on TikTok, go on YouTube. Ain't nobody trading 9:30 to 4. Nobody. So pick 9:30 to 12, 12 to 2, or 2 to 4. These are for you people that want to make $100 a day. Pick one. I'm tired of telling you guys about this. And in that session, if you can get an hour move, that's gravy. An hour move, guys, if I'm using a 5-minute candle, let's do the math because y'all know I'm a mathematician. If I get an hour move and I get an average, which is a 10 candle trend, 10 candles times 5 minutes is 50 minutes. That's why most day traders use a 5-minute chart or less. And they want to be in a trade for an hour at the most. I hope you guys are getting this because I'm breaking it down for you where nobody else is going to break it down for you. Because there's a lot of cats out here that aren't successful as day traders. I'm hoping this makes sense to you. It's 3 sessions, 9:30 to 12, 12 to 2, 2 to 4. If you can get an hour trend, you are really killing the market. I can't get an hour trend or a 10 candle trend if I'm looking at a 15-minute candle. 15 minutes times 10 is what? An all-day trade. The market one day a week, guys, will move from one end to the other. Most of the time it'll trend up, then it'll trend down, then it'll trend up. 1 out of 5 days it will just go in one direction. One day. And it's usually either Monday or Friday. The market just go one way. Tuesday, Wednesday, and Thursday, it's a crapshoot. All right. Mondays and Fridays. Mondays are my favorite days to trade. Hedge funds, pension funds get all of these funds over the weekend. They got to put that money to work. They're buying the stock market. On Monday, it's a fresh week. Everybody comes to trade on Monday. That's why it's my favorite day to trade. It's not necessarily always up, but statistically, they said that Mondays are up more than any other day because of the funds that come in over the weekend. So if you can trade on a Monday, trade on a Monday. You don't necessarily have to be long. But the market will shoot up in one direction or the other. Fridays are that way as well. People are setting up to try to hold things over the weekend, and hopefully they can capitalize on it on Mondays. I don't trade that way. There's no way I'm going to let the market or Trump or any administration hold my stocks or my trades hostage over the weekend. No way I'm doing that. But some of you guys feel like y'all can see the future and you know how Trump be thinking. So stop doing it. All right. But I'm going to teach you guys these candles. Now, let's look at oil. What time is it? 7:30? Let's look at oil. And then I'm going to get to some of you guys' stocks. So if I was looking at oil today, how would I have traded oil today? Well, you got 2 different charts that I'm going to teach you guys. Now, I did show you guys Heikin-Ashi, but for now, we're going to look at just regular trends, right? I use what's called a box setup. All right, the first 5 minutes of the day, I'm going to put a box around the first 5 minutes of the day. So the very first 2 candles well, the first candle of the day, I'm using a 5-minute chart, is going to be this candle and this candle. And it's very simple. It's the first 5 minutes. If we break out of this range to the upside and we hold it for about 2 or 3 candles, you can take advantage of it to the upside or to the downside. Now, this is oil, right?
Cat making his rounds.
So it looked like we stayed within this range. We could not break out. We could not break out of this range. We could not break out. We could not break out. We could not break out until there. What am I looking for? I'm just looking for 2 candles that close outside of this range. We couldn't get it. That are going in the same direction. We couldn't get it. We couldn't get it down here because we had a down candle, up candle, down candle, up candle. I just need 2 down candles in a row or 2 up candles in a row breaking out. It ain't happened. But it did happen right there. And if it happened right there, guess what? Y'all see how easy it is for me to trade and how hard it is for you? I would have been in somewhere around there and I would have caught this whole move to the downside. Y'all see how simple my strategy is versus what you doing? Going back and forth, looking up 7 or 8 different things, drawing all of these support, resistance level, looking at pivot points, looking at, like, why are you doing all of that? You're making it hard for yourself. Okay? Trading and investing is dumb simple for me. The problem is you would have had to wait to get in that trade at 11:30. I was on the golf course by 11:30. I was 10 off at 11:50. So I couldn't have caught this trade. But if I was trading my 9 to 12 session, I would have been in this trade. In fact, I would have been shorting. I want you guys to tell me how much money I would have made. I would have been shorting this at 76.82. I'm going to risk $100 per contract. That means if it goes up $1, that means I'm out of this at 77.82. It goes from 76.82, guys, all the way down to, now the maximum amount I could have made. You guys tell me the math. It went from 76.82 all the way down to low 71.67. Someone tell me how much money I would have made if I didn't go play golf today. If I didn't go play golf today, how much money could I have made?
Somebody said 515.
Okay.
Oh, wait, you guys can't see that. Hold on. 76.82 to 71.67. How much money could I have made today? Trading M76.82 minus 71.67.
Trading what?
And then you multiply it times 100.
Minus 71.67.
I said trading.
Did you do it right?
oil.
5.15 times 100. Zixion got it right. I think. Yep, Zixion got it right. Zixion 99 is our winner. Joel could have, I just had a $500 round that I just played. But you know what, guys? Sometimes being with friends and family costs more than $515. Life is short, guys. Life is short. Life is short. I missed out on a 515 possibly amount of money. How much money did I need in my account to make that 515? How much money did I need in my account to make $515 today, people? Trading oil. How much money? I needed. Boy, Zixion's on it. He owned it, doggone it. I needed $1,191. Guys, I could have made a 50% return.
How did you know?
And y'all know how long this trade lasted? 11:30. And it bottomed out at 3 o'clock. What did I just say? If you can get in an hour trend, oh my God. you are really killing the market. That trade started at 11:30. It bottomed out at 2:30. 12, 1, 2. That was a 3-hour trade. You're lucky if you get an hour. You're lucky. And in fact, guys, it went sideways for about 5, 10, 15, 20, 25, 30, 39, 40. It went sideways, guys, for like 50 minutes. It went sideways. So it didn't go straight down, but my trending indicator, I want you guys to tell me how many green candles did you guys see in 3 hours on this chart. I'm going to show you guys on this chart from where I got in or would have gotten in to where I got out. How many green candles do you guys see on that chart?
4,
How many?
3.
Not on the right side. I'm talking about
Oh,
here from my
None.
entry to my exit.
None.
Look like it's 1.
My entry to my exit.
None.
There is only 3 green candles.
What is it?
That's it.
It's 1
3.
before that long
3.
one.
Oh, I see it. Yeah, yeah.
If
yeah,
I
yeah.
see more than 1 or 2,
Uh-huh.
then I would get out. And then guess what happened, guys? Y'all know colors, right? Y'all know colors, right? Y'all know colors, right? Remember how I said
It's-
at 2 to 4 is your next trading session? Let's say you missed that whole move. Let's say you missed that whole entire move and you're like, dang, I missed the early session. I missed the early session where we went choppy, jalopy. Then at 11:30, it trended down. And let's say you got in and you strictly got in just because the color changed. Y'all see this? Look at my chart. At 3:30, we went from red to green. Hold up, Joel. It can't be that easy. We went from red to green. Joel, it can't be that easy. We went from red to green. And you could have said, dang, I didn't make any money, but now I can maybe take a shot right here at 73.76. Ooh-wee, I can get in at 73.76. And you could have held it for 5, 10, 50. You could have held it for 10 candles. 1 candle, 2 candles, 3 candles, 4, 5 candles, 6 candles, 7 candles, 8. Well, 10 candles would have put you at 420. You could have held it for about 5 minutes, 10 minutes, 15 minutes, 20, 25 minutes, 30 minutes. In 30 minutes time, guys, we went from 73.76 to about 74.36, 74.76.
That's 100.
How much money did I make in an hour? 74.76. How much money did I make actually in about 30 minutes?
$100.
We went from 73.76 to 74
Oh, $1. Okay.
did I make in 30 minutes at the end of the day. Taking a trade at 3:30, getting out of that trade at 4 o'clock. How much money did I make? You would have made your $100 for the day. How much money did I need in my account to make that $100? How much money did I need in my account to make that $100? What was my margin requirement on Thinkorswim? 1191. Almost a 10% return in 30 minutes at the end of the day. At the end of the day, you missed a whole day. Or maybe you lived out in California, you woke up early, you woke up at 10.
So futures ain't much different than
That's 1 o'clock our time.
No.
You missed the move to the downside. You're like, dang, I missed that move.
You can get in
But I got about
1,000
another
times
hour.
a day if you want to.
If we can move to the upside and I see that color change and I start seeing it go if I start seeing it go, consecutive colors, I can take a shot. And then you can use a moving average as a trend line. Y'all don't see it here, but I have a 10-day moving average holding this trend line. You can stay in. But here's the beautiful thing, guys. You didn't have to get out at 4 o'clock. What? You didn't have to get out at 4 o'clock. Joe, explain to me why you didn't have to get out at 4 o'clock. Because the futures market is open 23 hours a day, 6 days a week. So the bell could have rung and you could have continued to make money all the way up until here. This is 7:15. You could have held this bad boy all the way till 7:15, and then when it finally went red, you could have been like, all right, I'll get out at 7 o'clock. You could have waited. You could have come in, guys. The market could have closed at 4. The market could have closed at 4. And you could have bought oil to the upside at $74. You could have held that bad boy. Now, it did close at 6 and then reopened. Wait. No, I'm wrong by that. It closed at... I don't know. I've been trading futures for years, and I just cannot remember what time it closes. All right. I think 6. I don't know. It closed at one of them times. Somebody tell us what time the futures market closes. But all I know is you could have bought it at 4. You could have sold it at 7:15 at $75.50. How much money did I make on this trade? I bought it when the market closed. I'm sitting here watching TV during the market close, and I'm in oil. After hours. You bought it at 74, it goes to 75.50. How much money did I make?
I forgot what he said.
How much money did I make? 74 to 75.50. $1.50 times 100. There you go, Johnny Legend. Johnny Legend got it right. You made $150. And all you needed was $11.91 in your account. Now, here's the thing, guys. Margin will change. When volatility goes up, margin starts to change. I would not be surprised if oil futures start to go up in price and margin. We might check on Monday. It might be $1,500. We might check if oil goes to 100, guys. This margin for oil is gonna go up. So you better trade it at $11.91 as much as you can before that margin goes up. If it's close to the amount of money that you have in your account. So be careful, okay? Be extremely careful. Yes, you do need more margin to hold over, but I don't want you guys to hold over and hold over, not hold overnight. You don't need, no. When you say hold over, do you mean overnight, Arwen, or are you talking about holding it over the hours? You don't need more margin to hold oil in the after hours. There are some platforms that will require more margin in the after hours. Guys might want to check with Thinkorswim. I don't trade after hours, so I may be wrong in that, with Thinkorswim. Thinkorswim may charge more in the after hours for oil, but I don't ever remember them charging more. You guys shouldn't be holding this past the expiration date because you will be buying oil. So you definitely need more margin if you buying oil. I don't want anybody holding this to the expiration date. When you say investment, you mean, I see what you're saying. Can it be, that's a very good question. Somebody else asked that question. Let's say I have a $10,000 account. Yeah, it has to be free. Because if you have $10,000, let's say you had a $10,000 account, but you got $9,000 invested in Apple. you need to have 1191 free. So yes, you need to have that free in your account. You need to have that free. You can't be totally invested in options and trade futures at the same time. You have to have 1191 sitting there to be able to buy one contract. Okay. Very good question. You're asking day to day? No. If you hold it overnight, you don't need more margin for Thinkorswim. However, it may be different depending on the platform you're using. Every broker is going to approach the margin requirements differently. Now, the moves are the same. No matter what brokerage you guys go to, guys, $1 move in oil is going to be $100. The margin may be different, though. It might be $500 over here per contract. It might be $11.91 over here per contract. It might be $3,000 over there on that brokerage. But if we all bought at the same time, every dollar move, I'm going to be up $100. Every dollar move to the downside, I'm going to be down $100. All right. So be careful when you're trading commodities. All right. Cool. All right. Any more questions before we move on? Very good questions, guys. Now, remember, you always have your ChatGPT to help you with these questions. I know I want to answer a lot of these questions for you guys, but the same questions that you have for me today, write it down on a piece of paper. And if you have access to, Gemini or what else is out there? Perplexity or ChatGPT or what is his name? Cloud. What's his name? Clyde. Cloud. What's his name? What's the other one? You got Grok. Is it Clive? Cloud? What's his name? What's the Claude? Claude, okay. Clive? All right, that's Claude. All right, appreciate that. So you got Claude, you got all of your GPTs. Make sure you guys ask your GPTs. I know I'm pretty knowledgeable, guys, but I'm getting older, so my memory ain't the same. All right, I'll be close to the answer, but make sure that you guys fact check even me. If I'm wrong about something, please tell me in the comment section. I do not want to give out the wrong information. All right. You got DeepSeek. All right, cool. What else? Those are the only 5 we know of. We got Claude. We got Grok. We got ChatGPT. We got Gemini. We got Perplexity. We got Apple, Siri, whatever. I don't believe in the Apple one. I just don't believe it's going to be good. They've been telling us that it's going to be good for years. I don't believe it. All right, let's look at some of you guys' stock. All right, we talked about futures. We got about another 10, 15 minutes. Let's look at some stock today. Let's talk about some war stocks. How did you guys' war stocks do today? So you have the ITA, which is the Defense and Aerospace ETF. So let's look at that one. That's the all-important one. I always want to look there just to see what's happening in the market. So I'm going to look at it on a week chart. As you guys can see, this is an index that comprises pretty much all of the aerospace and defense stocks that are out there. And if you notice, guys, we are sitting at all-time highs. If you were buying this, if you were using my indicators that I use and all of my friends use, I'm not the owner of this indicator. Joe, you didn't create the TTM squeeze. Quit saying that it's your indicators. You always want everything to be yours. I wish I had a clown suit that I can put on so I could talk about what some of you guys be saying. All right. But if you get close to this yellow brick road, now I did come up with a lot of these names. I didn't come up with True Blue, though. I love that. One of our members came up with True Blue for the 200-day moving average, but I did come up with the name of this and all the little corny sayings. When the yellow brick road is angled up, it increases your luck. How geeky, but y'all remember that joint, right? So what I like to see is if the yellow brick road is angled up and it increases your luck and you're using the TTM trend or you're using Heikenaishi candles and you start to see it go green and you get 2 to 3 candles consecutively, you can take a shot. You could have taken a shot at this last May and you would have made a whole bunch of money. Let's say you missed it. Let's say you missed the move right here and you're like, God dang it, I missed the move. I always miss the move, Joel. Well, you're not going to miss moves anymore because you're going to use the What Would Joel Do method. You're going to use the 9 to 5 method. You're going to start checking your portfolio at least once a week, guys. This is a week chart. So if you can't check it every 7 days, I can't help you. I can't help you if you're not willing to check your money every 7 days. I check my account every 7 minutes. I know how much we worth every 7 minutes. Now, if you check it every week, one week you're gonna check and you're gonna say, hey, we just broke a trend. Wow. A whole nother week's gonna go by and you're gonna say, wow, we got a green candle. If we go green one more week, I might buy. And then you get a second week. And then you say, wow, Joel told me about this. And then you're going to put in an order to buy it on Monday morning. And then you're also going to say, you know what? Using that What Would Joel Do method, that guy's a little crazy, but he know what he's talking about. And now it's sitting at $260 using the What Would Joel Do method. Now, I know this is hindsight 2020. That's why I'm going to look at your stocks. I do what we call a magic show. If you can't perform a magic show with your strategy, then your strategy is probably
When he said it
trash.
and you still looking at it.
I can perform a magic show. You know what a magic show is? That
And those
means
quick red
I take your stocks from the comment section. I have no idea what it is, what your strategy is, what
Because it's
you
more
want to
than
do with it.
3 green
And
candles.
we're going to attach the indicators that I use
See, with
in
the
a
red, and
very
then you got all
simple
the other
strategy
greens.
where all we're going to look for is green or red,
Yeah.
green or red, green or red. If these moving
Yes.
averages are angled up,
Right.
we only want to take longs. If the moving averages are angled down, we only want to take shorts. The most simple strategy you're ever going to hear ever that I created, called the What Would Joel Do method, that uses price action and uses the 2 best trending indicators on the planet using the 2 best moving averages on the planet. See, I'm going to use the best trending indicator. So I don't care how many that are out there, I'm going to use the top 2. And then I don't care about the 50 moving average and the 20-day moving average and the 10. I'm going to use the 2 best that are out there, the 200-day and the 200-week. That's it. And I'm going to use the 2 strongest colors. Green is up and red is down. And we're going to stick that all together. And we're going to use one line, a trend line, not 5 trend lines, 1. You're going to use one little trend line. And when it breaks that trend and it goes the color that you like, and you get a couple of consecutive green colors on the best trending indicators on the planet, you're going to give yourself a 80 to 90% chance of winning. And because we're going to use the best trending indicators on the planet that are moving in the same direction as the 2 best moving averages on the planet, it's really going to increase your chances of winning.
It turned green, that was the time to start buying.
You see how I think?
Okay.
I'm not just taking things, I'm using the best of the best so that I can create something that is the most simple thing that you've ever seen. I'm not using several charts. I'm using one indicator up top, one indicator down low, and one trend line. And when it's green, I'm going up, and when it's red, I'm going down, or I'm staying away. Period. And here's the beautiful thing. I'm going to use it on whatever time frame I want to use it on. If I want to day trade, I'm going to use the same exact thing on a 5-minute chart in one of those 3 time frames. If I want to swing trade and I want to hold something overnight, maybe I'll use a 2-hour chart or a day chart. If I'm looking for 7 to 10 day trades, I'm going to use a day chart. And anything longer than a month, I'm going to use a week chart. That's it. I'm only using, y'all know I only use 4 charts. I use a week chart, a day chart. Sometimes I'll use a 2-hour chart for a 24-hour trade. When I intraday trade, I'm using a 5-minute chart. That's it. That's it, Joe. That's it, guys. That's it. So I'm going to give you guys 15 extra minutes so that I can do this magic show for you. I'm going to use your stocks. So in the comments section,
He froze.
Oh. We not too far from being out of milk.
Okay.
So we'll know.
Well, we doing good with drinking that milk.
Yeah.
You know, I had cereal once or twice.
Still froze.
Mm-hmm. I was gonna give it a second, then, or either just stop it and then go back. What you think? Trying to go back into the room.
I'm gonna turn the Wi-Fi off for just a second to see what I get.
am I back?
Yeah,
My
there you
screen
go.
is still black.
Well, it's a
Oh yeah, you're back.
All right, guys, y'all know every time I try to give you guys gems, the powers that be cutting off. Every time I'm about to give you guys some gems, the powers that be stop me from giving you guys the tips. All right, here we go. All right, so let's look at some of you guys' stocks. If you want me to look at it as a day trade or a swing trade or a investment, you need to put that in the comment section also. Otherwise, I'm just going to pull a day chart or a week chart. All right. Can I get some of you guys' stocks? All I see is KTOS. All I see is KTOS, Tesla. Hold on, let me write this down. KTOS, Tesla. What else? MNQ. MNQ on what? A swing trade, Alex, or a? Remember, let me know if it's an investment or if it's a trade. USO. MNQ, day trading. Oh, okay, day trading. All right. What else? All right, I'm gonna look at those for now. All right, let's look at KTOS. So KTOS, guys, is it's a defense stock. So ITA, you guys were looking at that. So Kratos is also a defense company. So if we were looking at this particular company, guys, if you wanted to buy this particular stock, what direction is the yellow brick road angled? That's that yellow line that's down below. What direction is it angled? Put it in the comment section. That particular stock is angled up. That means the 200-day moving average, we only want to take trades to the upside. If you were investing in this stock and you see the yellow brick road start to go up, this is all you have to do to make money. Money. You draw a trend line. As it starts to go down, when you see red candles, that is the go that I'm going to buy it soon, but I don't know when yet. When you see it go red, all you need to do is draw one little baby line, guys. One line, one line. When you break through that line, when you see it go green on the other side of that line, you can take a shot and you would have made all of this money. But look. What if I miss that move and it starts to go red again? I don't know, Joel. Did you say all you have to do is draw one line? Yes, there's one line right there. When you draw that one line, I want to see 3 candles to the side. Now, guys, you can't buy on a candle that's this big. Like this candle was 30 points higher. That don't count.
Excuse me.
But Joel, that candle, God, that's 30 points. It's got to be these little candles here. So no, this don't count. That's a 30-point candle, plus it's not 3 sideways. This is 3. This was 1, and then it went up, and then this one went down. That don't count. It has to be 3 sideways to up. These candles are going down. These candles are going down. So that doesn't count. But it does count. It does count right here. It does count right. Well, I think what happened to, well, it would have counted right here. So I guess this is 1 too. I don't know how I missed this one. But yeah, this would have been 1 as well. See how these 3 candles went sideways to up? You would take a shot right there. Bam. Whee! All the way to the upside. Whee! All the way to the upside again. Now, that doesn't count because this big old bad boy was like a 30% move in one day. It's not going to happen, all right? All right, let's look at Tesla. Even if you looked at that on a day chart, guys, let's say you wanted to look at it on a day chart. I know you guys are like, well, that was the week chart, Joel. Okay, I don't care if it's a day chart. You're going to do the same goddamn thing. Look at this. It went red. You put one little line, 3 candles. You guys that want to take these 7 and 10 day trades, I just showed you how to do it. See those 3 candles, 4 or 5 candles, you would have made money. All right, you would have done it again right here. You're looking for 10 candle trends, which would have been 10 days if you're looking at the day chart. You want to try to get in within the first 3 days, the first 3 candles. Anything after 3 candles, you're late. You see how you got red candles, you got a line, it went 3 candles, and then it exploded in price to the upside. Y'all see this? You would have worked over and over and over again. But here's the thing. The 200-day... Oh, dang, you can't see this. I'm stuck again, Zane. I think. Hold on. Can you guys see me? Am I stuck? All right, cool. That was stuck. All right, cool. The 200-day has to be angled up. It has to be angled up. See, it's angled down here. Even though it worked, this blue line here, true blue, was angled down. This needs to be angled. This needs to be angled up. It needs to be angled up. When it's angled up, it increases your luck. It increases your luck over and over and over again. Y'all see that? Over and over and over again. All of these green moves are 10-day moves to the upside. Y'all see how it worked over and over again? Over and over again? Over and over again? Y'all see that? Over and over again? It ran off like 10 trades in a row. Which is why trading and investing is dumb easy for me. Okay? Y'all see this? I mean, you can see it with your own eyes. It's not even like I'm doing it. You can see it. Red down, one line, 10 days up. Red down, trend line, 10 days up. The problem is that some of you guys want more than 10 days. Well, then you need to look at a longer chart. 10 candle trends are the average trend moves on any given chart. So if I'm looking at a week chart, I'm looking for 10-week trends. If I'm looking at a day chart, I'm looking at 10-day trends. If I'm looking at a 5-minute chart, I'm looking for 50-minute trends. If I'm using a 1-minute chart, I'm looking for 10-minute trends. Hope you guys got it. Y'all see this? I mean, you can see it with your own eyes. The thing dang near won every time. Every time. Dang near every time except right here maybe. And I mean, even here, it didn't give you 3. It gave you 1. It gave you 1 green. That's 1. That's 1 green. It gave you a 2nd green. But this green candle, the 3rd one, guys, is not higher or sideways. In fact, it's an engulfing candle. Look at that. It's engulfing the candle before it. So that doesn't count. It's got to go 3 sideways to up. All right, showing you guys my strategy. All right, that's Kratos. Let's look at Tesla real quick, because since you guys didn't give me too many, we're not going to look at too many. Tesla, same thing. Let's see if it works. I don't believe it's going to work. Word? Word? You're telling me that the what would Joel do method's not going to work? The method that I've been using for a decade? Y'all see this? All right, now that might have been a nice little loss, but look, you would have been winning for 2 days. Even though you put a trend line here, but look, I love the trades, guys, when they're close to this blue line. So even though you were up, if you got in within 3 days, you still would have been up the next day. But we'll take that as a loss. I like it to hit the blue line. I like it to hit the 200-day. And then I want to take it. This one was probably a break even, but then here's another one. Look at this one. Ooh, 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 to the upside. Y'all see this 20-day trend? Yeah, Tesla was playing around on these. Then it finally took off here. Then it finally took off here. Look, trend line, green. It has to be sideways. So yeah, Tesla was kind of playing with it. It only gave you a couple. So I would say maybe 50-50. People aren't really loving this stock. What's another one? MNQ day trading. Let's see MNQ using my...
No, thank you.
Let's look at MNQ using my strategy. All right, let's look at my... I'm going to use like a 3-minute candle. So early this morning, none of us could make money on this bad boy. It was going sideways, sideways. So the way I would have traded this, guys, if I was trading MNQs this morning, even if I just did the trend line, even if I just went trend lines, even if I went like this, when it breaks this trend and it goes down and it goes red, Joel, I would have just started shorting when I saw 3 of them consecutively. Right? Or you could have been like, well, Joel, I didn't want to short the market. So you could have waited until it went red, and then as soon as that red ended and you got the first 3 green candles, you could have been in somewhere around here and you would have caught this move of the day. Now, that's not actually how I trade. This is just going off basics. This is going off basics. 3 candle green, 3 candle red. When I show you guys exactly what I look for, then you're going to see something different. Even here, when we had a trend to the upside, and it was how many candles? About 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 for an hour. And then we started to go down. You could have caught this move. You could have caught this move. Y'all see all of these red candles? It's not that easy. Yes, it is. When I trade, it's that easy. I don't know if it's easy for you, but it's easy for me.
Get started by the jealous people.